What is up, everybody? Logan here again with another video coming right at you guys. Today I'm joined with Halcyon Trader. He's been on the channel quite a bit if you guys remember the calendar spread videos. And we're going to do a basics of futures trading today. We're just going to keep this one quick, probably about 15 minutes. And we're just going to get into the basics of futures trading. I'm not like the most experienced futures trader, but Halcyon's been trading them for over 10 years, maybe even 15 at this point. So I'm excited to have you back on the channel, and I really appreciate you coming back on for another one.
No problem. It's Groundhog's Day again here at the third attempt of this one with the my internet dying on me for whatever reason.
Yep.
So we're back again. This is intro number 5 or 6 at this point, attempting to get this through. So let's rock it into it. Futures, right? Future trading it's interesting. It's definitely something, if you've never done before, I would recommend taking a look at it. It's just, you got to know the beast you're dealing with in futures. And from my own personal experience with it, I personally found my emotions feel very manipulated when I'm trading futures. I'm not sure exactly why that is. I think it's related to the movement scale of it, but I always feel that if I don't come in with a really solid game plan, that I'm not in control of what's happening in the futures trading, and that I feel like I'm just being reactionary the whole way through. So, but it's always important to understand the vehicle you're in. So let's just get the pricing out of the way quick, and then you can always adjust it based on whatever other future contracts you're trading. So right now we've got the ES mini up here. This just means the electronic version of the S&P 500. Understanding the leverage you're utilizing with it also is important. So the one contract in this case, the way you figure that out is each quarter point movement. So the ES will move in quarter points. So if you're watching in the little left-hand corner of my screen, we've got the paper model up here because for whatever reason we were 0 for 3 trying to do my live account. So now we're switching to the paper version. But when you watch this move at the quarter points, right, each quarter point is worth $12.50, and thus a full point move is worth $50, right? $12.50 times 4 is $50, and thus to figure out the actual leverage you're using with an ES contract, you times that by whatever the actual ES is. So 39.93 in this moment is times that by 50, and you're probably looking right around $200,000 or so is what a single contract is worth when you buy one or sell one. So it'll move percentage-wise as if you have $200,000 on the line. Okay, put 2 of them on, it's 400,000. 3 of them on, 600,000. Roughly, give or take, that math is somewhere around there. I'm not going to bust a calculator out and figure that out quick, but it's something like that. So that's where all those quarter point movements, that's what the point movement looks like. So when you're doing, you need to have margin accounts to do this. So when you're doing them, you can understand how your margin works when you know that what a single contract is worth. So now getting to actually trading futures, not that complicated, buy or sell one. However, the way that you come about you need to figure that out for yourself in terms of what works for you. Are you a really technical analysis guy or gal? Then that's the side you're going to utilize. You can slap on 1,000,010 indicators on this. There's a bunch of different ways to slice it from the technical side. Are you really more of a price analysis person? So you're looking primarily at price patterns, then that would be the way you'd go about tackling this. Are you more of a support resistance person where you have real specific defined support resistance lines and you want to buy or sell when you come up to those or use them for support or for resistance, selling into it? That would be the method. I'm going to talk to you about the way I do it, and I have tried every variety of those. I've gone from having 1,000,010 indicators on there to how I do it now, which is literally this view right here. It's just purely price with I'm looking for a couple particular patterns, and when I see them, I take them, and when they're not there, I don't take them. And so it happens to be, if I do a futures trade during the day, maybe 1 to 2 times a day, this setup actually takes place, and sometimes not at all. So I'll walk through what that is. Now, one of the problems I'm going to have here is that because this isn't my actual live account, on my live account, anybody in the actual Discord knows that I have levels that I list and I post them on what they look like on my chart. And I usually send them on the SPX for you guys, but I also put them on my ES chart too for the futures trading side of things. This is the paper one, so I don't actually have them pasted on here. And I'm not going to go spend a minute here doing that. So we will just pretend as if they're on here. Maybe I'll slap one on and then we'll go from there. Because I do know there's a level, and actually, let's get out of here quick, and I'll put one of them on that I know exactly where it is off the top of my head. So let's grab this. So I know we have one that's sitting around here, and I know we have one that's sitting roughly around here. Okay. Oh, there's also some stuff here on 4,020, and there's a couple levels that are right at the top of where we are right now in this range, but we're going to choose these two, and I'll walk you through the pattern I use for this. Okay, so once you've figured out roughly what the value is and what you can expect in terms of movement, for me, my always next step is going to be looking at the macro trend first. So before I go into any trading day, and Logan, you can testify to this, is that I'll usually do a little write-up on what my awareness is, what my kind of thought process is, what I'm expecting to see based on what I follow and the items that I'm utilizing for that. I'm not right all the time on those. In fact, I'm probably, who knows what this percentage of that is, but I at least go into the day trying to be aware of as many factors that I think are going to influence that specific day. And because right now, most of 2022 for me has been very short-term trading, mostly day trading, which is a real big about face to what I was doing in 2021, which is mostly calendars and diagonals and things that were, between 5 and 10 and 15-day holds to really, really short term. So now what I'm working on this year is really getting focused in on how can I give myself the best odds to know what I should expect throughout the day. Okay, so right now, and I've been saying this in our Discord for probably 2 weeks now, that maybe longer than that at this point, but I think that we're still going to we're maintaining a bullish upward bias. I still believe we're in a bearish cyclical market, but inside of that, bear markets always have really decent rallies in them, and we're in one right now. So until we break down from some of the support that we have, I'm expecting it to go up. So when I know that's my general lean going in for the day, I am more likely to be looking for setups that are long in nature. And I usually will avoid my shorting positions typically on this. Again, this is my temperament with futures. This is the way I like to do them because for me, I just know myself, and I know that for me, I will get more emotional with these. Like for whatever reason, I could do a credit spread at 10 times the leverage on this, and it doesn't do anything to me. But for whatever reason, with the future contract, for some reason, that just is not my most favorite way of viewing it through this. So these are always complementary to what I'm doing. Also with spreads, I will use futures to help leverage those or help hedge those if they're going the wrong way on me. So that's another way to go about doing that. But that's a whole different video we can get into, using futures to help hedge on credit spreads. Anyway, so my favorite pattern, and I think we actually had two today. So my favorite pattern, they weren't the cleanest, but my favorite pattern here is right here. What I'm looking for with futures in particular is I want a high probability trade. I always want a high probability as often as I can. And because I don't take them very often, I'm not flipping them back and forth all day long. I'm really, when I'm in, I'm getting them because I have a very, very specific intent I'm planning on seeing. And I do not want to see this go against me at all. Like this needs to go in its favor immediately when I get in, because I'm expecting I'm right on this, because I've seen it enough times and I've back tested enough times that I know what I'm looking for. Okay. So one of the things I look for, I use a lot on this, is the 5-minute RSI. If anybody's watching my other videos, you know that I'm using this on lots and lots of stuff that I've done. Okay, so here's the 5-minute below. Now, I view it, because it's short-term 5 minutes, I'm not really viewing it as being super overbought or super oversold. What I use it for is whenever it's above 50 or below 50, that's the direction I'm trying to make trades in. So if I'm below 50 on the RSI, I'm trying to look at trades that are more bearish or short in nature, and then vice versa when we're above it. And so I just, reconfigured this thing to show below 50 go red and above 50 go green. And you can do that on your own, easily just go into the RSI, indicators of this one right here and just adjust the settings to do that. Right now it's set to give you a setting of above 70 or below 30, but that's not how I like to use them for the 5-minute. Okay. And then I also decided to just give me another visual cue is I just added in another of the RSI and just put bar charts that are red when it's below and green when it's above. That's all that this is below. So it's the exact same view of the line above here. I just added in some additional just confirmation for my eyes, right? Because trading is so visual oriented, right? So you want to always train your eyes to recognize patterns. And as humans, we are amazing at pattern recognition, right? That's one of the things that can give us an edge in trading is being able to recognize patterns that show up over and over again. And this was just a way for me to help reinforce those patterns that I look for on a regular basis. Okay, so here's what it is. Here's my secret sauce, so to speak, which is not really secret, but here you go. So what I look for is a couple things. One, when are we getting we'll start here at this example. All right, so RSI is negative. And so remember, for my day, what I'm looking for is I'm expecting more long pressure today. So I'm trying to get setups that are more long oriented. To me right now, that still feels like the right edge. And I don't want to go against the probabilities. I want to always be with them as often as possible. So my first possible setup today was in this time frame when we opened up. Now, what I was looking for was having a couple 5-minute bars, usually 2, but ideally 3, where they are tight in nature, but don't have huge wicks. So like these 2 right here are, actually these 3 are pretty tight where the price generally spent its time, but they had a big up and down wick on both of these. And that is actually what I'm looking for, but not with the wicks. Okay. And I'll show you an example in a minute here, an actual more ideal one. Now, the first trigger for me was that our RSI went from negative to positive right here, right? So it goes back from below 50 to above 50. So immediately that's a heads up to me. I also can see it showing up with these bars going over. That's my heads up that, hey, do I have the actual price action to get long on a futures contract here? And have I seen at least 1 minute, 5-minute bar that's tight, followed by a second 5-minute bar that's also tight consolidation. And we're going above the 50 on the RSI. Okay, to have both those things happen, check and check. Now, of course, the problem here is that the wicks were too long for my taste. And so I said, nope, this is not a trade that I want to take because I want, again, probabilities in my favor. And I think this is really difficult to read in the moment with these wild up and down swings. I think actually I was talking to one of the members in our Discord earlier today, and we had just made a comment about, wow, that was quite the wild price up and down candle there, because they're just moving pretty quickly this morning. So I opted out, but that would have been the setup right here. Your heads up is right here. And then once you get a second and ideally a third price candle that's really tight, you're looking for the next candle to go anywhere above the bodies of those candles, and you buy there, right? So you should have been buying around here when this candle opened and started ripping. And then what I'm looking for is get that to rip open. And ideally, I really want this next candle to be, that's kind of my main one, is catch some of this first bar and then get this next candle to open up as well. And I would be closing right away near-ish the top of this one. That's basically the strategy that I use. As you can see, I'm just sniping in and out. I'm not sitting here playing to hold for, eons and eons and eons. There's a couple mods to that particular strategy of how I do it, but that's basically the gist. Now, the best one that I had today that showed up was this one right here, was the closest to a decent one here, right? This little section here. So again, the same exact principle, right? RSI goes negative and then it is working its way positive again. We get a signal. Let me get the tool here. We get a signal. It shows us going positive again. So that tells me the pressure is back onto the upside. And then what do we get out of this, right? You get typically we got 1, 2, but again, these tails are really long. Again, this is not the perfect setup. And because knowing my market awareness and my situational awareness over now what's happening, we just had a giant run yesterday, obviously. I'm going through this in that moment, I'm thinking this market is is a little dodgy right now with these big wicks up and down. And so I want to make sure that I'm seeing this correctly and that I'm reading this correctly. But the price action is the price action. And so I would be more conservative in the way that I would take this. Now, again, what you should have done is, let's clear these out, is you would look for this next candle to open and immediately start moving above the prior bodies. Okay, so that would be a buy. Then what you want to see happen is if this following candle actually follows through, which this sort of did for a hot second. But what I usually do then is I'll put a stop immediately at this one right here. We're right at the top of that candle. Wherever that one closed, I have a stop right there. Now, again, why am I doing that? Because when I'm entering these, I have watched this pattern over and over and over and over again. And when I'm entering these things, I'm expecting to be right. And I'm not interested in letting it play out for 10 candles to see if I am correct. To me, because it's just, it's what, 50 cents to get in and get back out. Like, it's not like it's a pain, it's not, and there's so much liquidity here. It's not like it's a problem to get in or get back out. Where, for example, an option trade, that can be tricky. That can be really tricky to get in and out of an option trade on the SPX getting filled. Like, you can be sitting on the mark for a while before it actually will fill it up. And we've all been there before, especially trying to get rid of an option trade. Take the damn price, Mark, with the world. So that happens right on a pretty regular basis. Now, this one did not really materialize as well as we would have liked, but it did move a little bit here. And I would, again, just look for that pattern over and over and over and over again to set up. You kind of had another one here before this other run, but I personally didn't take it. I could have seen justification for, a couple tighter bodies and then it takes off again. But again, the most ideal ones is you go, your RSI is below 50, goes above 50. This guy just came down and touched it and never actually went below. And that probably is a testimony to the strength of the move. But I personally did not participate in any of this. Now, again, what would you have done had you, right? Let's walk that through. What I would have done had I taken this is once this pushes above the prior body, you get in the trade. And sometimes it goes really fast. Sometimes you don't get a chance to do it, right? That's just what happens. Then you immediately, once this bar closes, you're putting your stop at the top. And so, you just wait there and you do the same thing on the next one. You just continue along the way up this chain here. Now, there's actually was a level here as well that I don't have listed here. I know it's on there because we use it a lot in the SPX today. That once we get above those levels, there's a pretty high degree of probability that you're going up to the level above it. And that's exactly what that did. So I probably would have given it a little more room to move. But again, with futures, I'm sniping. I'm not trying to shotgun them and just take a whole bunch of trades, over and over again throughout the day. I want to get 2, maybe 3 a day if they work out, but they have to be perfectly set up for me. And that's what I'm looking for over and over and over again. And so, again, from a futures trading, that's how I do it with just price action. There are lots and lots and lots of other strategies where you're using, say, like the daily VWAP, or you're doing an anchored VWAP. And you're looking for support resistance and trying to find, buying those around where the support resistance are. Totally valid strategies. I'm sure there's elements and different, nuances to utilizing it that way. Just for me, this is what works for what I've learned to do over the time. And this is just simple. And again, for me, I try to get trading as simple as possible, get my emotions out of it as much as humanly possible, make it as mechanical as possible. And so what I'm, again, over and over again trying to do is, do I have an edge? Check. And then any trade I'm entering into, do I have an actual reason why I'm entering into this trade? And the reason can't be because I just got to get in a trade, right? That is the dumbest thing you could ever do. And if you want to blow up an account, do that. Just get in trades because you have the itch. Now, we all know the itch is real and everybody gets it here and there when you're trading. And it's, like right now, for me, watching all of this going on, and I have nothing on that's participating with it, that pisses me off. But I also know, like, my last trade I had was a put credit spread this morning that I put on right around here. Now, the reason I did it is because we came right down to my support levels and we were seeing the RSI strengthen up. And it was a pretty easy gimme trade. But yeah, I mean, I wish I had something that was participating. If you would have had this and watched been in a futures contract all the way through this right now, I mean, you're probably making a few $1,000 out of this easy. And so again, but it all comes back to setups. It's the same thing no matter what you're using, whether it's futures or options or stocks. It's all the same thing. Be aware of what the market's doing. and know intimately what your setup is. And if you don't know either one of those variables, or you are fuzzy on either one of those variables, you are destined to be really inconsistent. You will be a consistently inconsistent trader. That will just happen over and over and over again, because it's so easy to get your emotions kicking you in the face when you don't have a solid foundation while you're doing something. And that is unfortunately the piece that most traders just never ever, either A, they just forever are forgetting to pay attention to those things, or B, they just are unaware that those two elements are ruining your ability to be consistent. And we talk about that at length. I mean, I think you Logan, you and I have recently talked about that at length. This weird I don't even know, this misnomer, or this just kind of weird mentality that you shouldn't ever have a loss when you're trading. And that is just completely false. In fact, what you should be doing is planning on, I am going to lose. I plan on losing, and that will happen. It's just a matter of, do I know how to manage my risk when I'm losing? Because it's absolutely going to happen. And I think that's the thing that nobody really ever thinks about. They only think about the winning. They only think about what cars they're going to buy with their winnings, or what islands they're going to buy. And they don't think about
that's me.
how, right? They don't think about, how am I going to handle that loss? How am I going to manage that loss? And I will tell you, from having hundreds of losses in my trading career, that I have no problem taking a loss when the loss is because it is just what happens, and not because I didn't follow my trade rules, or I didn't have a setup, or because I was just emotionally FOMOing into the trade. Those kind of losses are the ones that keep you up at night and make you wake up in the middle of the night thinking about the stupidity of what you did, jumping into something, or full sending your account on put options yesterday, or something like that. Like doing things that just are pure emotionally driven. They're not logic at all. And the market rewards those who can get unemotional and logic, and get purely logical with it. So, I mean, I think that's a good start to futures. The next one, if you want to do a follow-up, let's do one that's more of a technical analysis driven trading model on futures. Because I used to trade them primarily technically driven. I mean, there's still a little bit technical here what I'm doing, but not anywhere near the degrees by which I used to do this. So, but again, for some people, that's the way they like to do it. And so let's show them how it's to manage that way. So
I'm down for that. Awesome. Well,
sweet.
I appreciate all your time in this one, and I know you got to run, so
I do.
We can definitely wrap this up. And I appreciate everything you're showing between the price levels and just the bodies of the candles. That should help people out, especially using the RSI, because the RSI is very straightforward. So that's going to be everything for us today. Like I said, for the third time, I appreciate you coming on, and we'll definitely have you back on to continue. If you guys have yet to leave a like, a comment, or subscribe, do that now. And we will see you guys in the next video.